daily market commentary for Friday, the 1st of November, which means first Friday of a new month, which can only mean one thing. It's the day of US non-farm payroll data. The Asian and European sessions were, frankly, virtual non-events for FX, although European equities were happy to edge a little higher. That aside, we are pretty much unchanged in the markets from Thursday's close. So without further ado, what did we get? This non-farm payroll number will be affected by the General Motors auto strike. So estimates were marked a little lower than perhaps we would normally see. However, even with a decline of 42,000 jobs in the auto industry, the headline number still came in at plus 128,000 and an upward revision to last night's number up to 180,000. The unemployment rate nudged a little higher up to 3.6%, which was expected, mainly due to the General Motors strike. The initial reaction was to buy dollars, with dollar yen jumping from 107.95 up to 108.25, and we had euro heading the other way, falling from 111.55 down to 111.30. US equity futures reacted positively, with the Dow Jones jumping about 80 points immediately after the release. So all in all, a pretty solid number, and certainly a little bit better than expected. The market consensus for the headline number was only up 85,000. Next up, we have some more important data. US ISM manufacturing PMI data for October, which actually comes in a little bit weaker than expected. And wouldn't you know it, time to reverse those NFP moves, with dollar yen moving back down to 108 and euro dollar moving back up to 111.55. The one thing not reversing is equities, which continue to push higher in mid-morning US trade, with the Dow Jones up 250 points and the S&P at a new record by the time Europe closes for the weekend. The last headline of note brought some more positive sentiment from trade talks between China and the US, with hopes high for a phase one agreement to be signed. This saw dollar yen back up to 108.20 and euro dollar up to 111.65, and also gave the equity markets a final boost, with the Dow Jones moving to up 301 points by the close, and obviously the S&P closing at a new all-time high also. So a great day for equities, but the FX market was happy to spectate somewhat after a rather hectic week. So from a technical perspective, just one thing I wanted to touch base on here, especially after a quiet day for FX than you might have expected from a normal NFP day. I have a dollar yen chart up in front of us here. It's an hourly chart, which I think I may have shown before, but not for necessarily the reason I'm showing you now. But this hourly chart here shows a very clear double top in place around the 109.30 area. So the first time we touched it was right at the very end of July, beginning of August, and then we touched again at the end of October, so last week. So we now have a pretty, firm double top in place, and since then we've actually come off. At the extreme, we've come off 140 points. So why am I showing you this? This has happened. This retracement off these highs has happened at a time when we've really seen some acceleration to the top side in the equity markets, especially with the S&P making all-time highs. So we all know about the risk-on or risk-off relationship between equities, dollar yen and yen crosses. So the question is this relationship beginning to break down, or is this just some short-term divergence? It's hard to tell, but it will certainly be interesting to see if there is a complete breakdown, how long it will take the markets to adjust to a relationship which, frankly, it has blindly accepted for over 20 years probably now. Definitely worth keeping an eye on over the coming weeks, but for now, just simply respect the resistance at the double top line at 109.30. And with that, I wish you all the very best of luck for the week ahead, and I look forward to speaking with you soon. Cheers.